Wall Street is built on one thing: numbers that tell a story. Financial statements aren't just reports, they're the language of business. They reveal power moves, hidden risks, and billion-dollar opportunities. If you want to play in the big leagues, you need to understand this language better than anyone else. Think about Amazon.
Our stock peaked somewhere around $113. Our stock went down to $6.
Jeff Bezos built a retail empire while reporting losses for years. Why? Because his financial statements didn't just reflect the past, they told investors a future story of growth.
As a result of going up 70% this year, you have become the wealthiest man in the world.
Financial reporting isn't just about compliance, it's about strategic storytelling. Every company's financial DNA is captured in the financial statements. The income statement, that's the Wall Street's scorecard. Did you make money or burn cash? The balance sheet, that's the company's financial health check. What do you own and what do you owe? The cash flow statement, the most critical number. A business can survive bad profits but never bad cash flows. The statement of changes in equity. Who really owns the game?
We created an exoskeleton.
Welcome to the Cybertruck unveil.
Let's take Tesla. Its income statement has shown wild fluctuations in profitability, but its cash flow statement tells a different story.
In our first year of production, we produced just over 20 vehicles. And the way things are tracking right now, we will actually have made over 10 million vehicles next year. So we'll pass the 10 million vehicle cumulative. That's a lot of cars, man.
Strategic reinvestment, aggressive capital expenditures, and government subsidies that kept it moving forward. Wall Street isn't about how much you earn, it's about how you report it. Let's say revenue recognition, where companies can report when it's earned, not necessarily when the cash is collected. For example, Apple's iPhones. Every iPhone you buy comes with future software updates. So Apple defers a portion of its revenue, recognizing it over time. Another example is stock-based compensation. So Amazon, Google, and Meta pay employees in stock options, deferring costs while retaining talent. That's why reported expenses may not reflect actual cash flows. Let's talk about fair value accounting. Look at Netflix. Its balance sheet lists content as an asset. But how do you value a hit series like Stranger Things compared to a flop? The answer? Fair value accounting. Financial statements reveal what's going on, but disclosures to financials reveal what's really going on. Now let's talk about lease accounting. Before 2019, airlines could keep billions in aircraft leases off their balance sheets. With new lease accounting standards, suddenly airlines like Delta had to recognize billions in liabilities overnight. Let's talk about business combinations. When Facebook bought Instagram for $1 billion,
Instagram was snapped up
by Facebook for $1 billion.
The assets on Instagram's books were worth far, far less.
With just 13 employees, Instagram is run out of a small San Francisco office that doesn't even have a sign and so far hasn't made any money.
When we acquired Instagram, for example, I think it was 13 people, right? So it had one app on one platform. Facebook bought Instagram for $1 billion.
So in the financial statements, Facebook recognized the acquisition as goodwill, the price paid above net assets, betting on Instagram's future dominance. Financial reporting isn't just for accountants, it's for strategic business leaders. The best CMAs don't just track numbers, they shape financial narratives. Imagine you're advising a startup gearing up for an IPO. Your job? Make the income statement look strong, but ensure cash flow supports it. Structure assets and liabilities to optimize valuation. Use disclosures to highlight strengths while mitigating risks. This isn't just compliance, it's the financial strategy that drives valuation, investor confidence, and billion-dollar deals. Wall Street rewards those who understand the game of numbers. External financial reporting isn't about recording history, it's about writing the future of businesses. And CMAs, they're not just number crunchers, they are the strategic business partners who drive corporate success.